once again, we back. Looking at Gex theory, we're going to start with the next 98 days to expiration. So this is all the gamma exposure, net gamma exposure per level until the next expiry. So the big thing that sticks out to me are these delta curves. Most of the time when I look at these gamma charts here, just in particular the Investor Haven version, there's a lot of different types you can look at. The reason I like his so much is because he does put these delta curves on there. He does put the cumulative delta or cumulative gamma on there. The reason the delta curves are important is just because these are the probabilities of these strikes being in the money by those expirations. So if we're looking at probabilities of being in the money by those expirations being really low as the gamma curve starts to shrink, starts to get closer and closer to zero, the likelihood of being in the money there, that's what's going to cause these gamma squeezes and or cause it to be a magnet. So what I'm looking at here is sort of a gamma squeeze to the downside, because you're seeing the big gamma build up here even into these lower delta probabilities. So what that tells me is that the market maker essentially, at least for the time being, is going to be under hedged towards those levels. It's going to be inclined to sell, especially being under the volatility trigger. You're going to be inclined to sell any rip really into those levels. You're not going to have the same supportive flows that you're used to. Doesn't mean we don't go up. Like today, we still had a nice little ripper that you could have made money off of, and I said that in the Sunday or my last video, my weekly outlook. I said that there's possibilities for big upsides because the ranges are going to be big. Just because you're under the vol trigger does not mean you go down. It just means that market maker is going to be going with the market, and above the vol trigger, the market maker is going against it. He's selling strength, buying weakness. That's what creates the volatility compression. Volatility expansion just means the ranges are going to be wider. Your expected ranges on the options chains are going to grow. Obviously, VIX is going to be green or go up. But that means that you can catch the rippers. You can catch nice 50 points to the upside if you want to. Personally, in an environment like this, I'm just looking to short. I don't really need to play the upside. I just need to know, hey, we're in this negative gamma environment. We're underneath all the vol triggers. I've got nice big gamma nodes, gamma levels sitting in the downside, big gamma, outside of the delta probabilities. I'm looking downside for now until this picture changes. Now, could it change tomorrow? Sure, but we're going to look into the next couple days, into next week. So this is going to be for Friday. The week is essentially going to be the weekly look at it. We looked at the 98 days. Now we're going to look at the weekly. Big gamma level here at 4,000 underneath the vol trigger. I'm still bearish. I'm not going to think about it too much. Obviously this could get squeezed to the upside, but you got a lot of work to do to the upside. You'd have to get above a lot of these levels, and then maybe get a close above some of the bigger volatility triggers in order to convince me that the bull is back. Bear is here for now. So that's going to be Friday. This is going to be tomorrow, 40.60. So this kind of sort of tells me, this is tomorrow, all this gamma expires tomorrow. This tells me that they might spend some time here at 40.60, and there's potential for a squeeze to happen above that level. If those gamma levels start to expire, if a lot of this stuff starts to expire, the market maker essentially could unhedge. If he is hedged for them, he could start to unhedge his futures positions or his net short positions, and start to cover. And that would be an interesting thing. I wouldn't be interested until 40.75, and then you got 41.05 sitting above here. So close above 41.05 would lead into Wednesday, which looks like there's some positive gamma sitting here. This has been here for a couple days now at 4100, sitting there at 4100 around a max pain level right above the 40.90, which caused like a 40-point drop on Friday. So definitely possibilities, but you do still have these bigger negative gamma levels to contend with. So tomorrow and Wednesday, possible up moves. I'm still bearish until they can prove it to me otherwise. A lot of this gamma here is sort of canceled out. It's just barely net positive on that level, as we can see in the overall picture here. So it doesn't mean I'm super bullish. It just means I'm cautiously aware of that, because this market's crazy. It could cause some crazy ripper. I don't want to be caught off guard by it. So if there is possibilities for upside, it's going to be into Wednesday, maybe tomorrow late day into Wednesday. Thursday looks just horrible. If we're underneath these levels at all, there's just a ton of gamma expiring. Again, could be a recipe for a squeeze. That squeeze is not happening anywhere except for above 4100 in my opinion, probably closer to the end of the day. If it doesn't squeeze, we could definitely start seeing this 4000, 4010 sort of acting like a pin to the downside. Anyways, if you like this, make sure to let me know, and hopefully this helps you. Peace.